You're listening to the Non-Del Influencers Podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
Welcome to the latest episode of Non-Del Influencers Podcast. Ross, we could probably spend an hour talking SEC football, but we're not going to do that. So super excited. Thank you, Ross. Ross Miller of Miller Home Mortgage joining us today. Ross, as a fan of football, how exciting was the past weekend as they kicked off nationally?
Yeah, I thought it was great. Really good games. Lots of upsets, which are always kind of fun at the beginning of the year. You know, some teams are going to get better in the off season, and some teams are going to get worse. And yeah, we'll see how it plays out. It's a long season.
Yeah, I don't think I remember. It used to be that they kind of would line up a couple, rollovers for the first couple weeks as the teams got ramped up. I think we had 3 top 10 matchups this weekend. So yeah, it's a brand new landscape in college football.
Yeah, absolutely. The more good games we can get, the happier I am as a football
absolutely. Absolutely. And we're recording this before the NFL kicks off. So I still have high hopes that the 49ers will win the Super Bowl this year. So
yeah, well, Saints and 49ers play, I think, week 2. So
absolutely.
We'll see what happens.
Be a good game. Who, as being a Saints fan, who is in the quarterback room this year?
Rattler is going to be the quarterback to start with, and then Shuck is the backup. So he's the second round draft pick.
All right. Well, now that our football speakers, I can talk football all day. But Ross, one of the reasons why I wanted to have you on is you were an earlier adopter of the non-delegated platform. In fact, well before my time, and I would love to talk about the how you got started and who you first worked with, and just how did you come into the non-del space all the way back in 2012 when it looked a lot different than it does today?
Yeah, it was a little bit of a decision that was really business oriented more than anything else, right? And control oriented. After the credit crisis, it was a lot of broker business, and we went from doing double-digit loans every month to doing 2 or 3 loans every month, and you just couldn't afford to lose any loans.
Yeah.
Personally, what I ran into was a big issue on the appraisal side at the time. Now, I don't know that it's quite the same now, but lost 2 or 3 loans in the same month when we were ordering through an AMC, and we didn't know who the appraisers were, and they were making really bad decisions, and customers were frustrated, and we just couldn't afford to lose those deals. So I had already looked into the non-del space, and when I knew I could do that and then work with an AMC that I wanted to select and go down that route, where I still wouldn't know who the appraiser was, but I could know that it was somebody on a panel that I was able to put together. It made it much easier to do that. So once we made the switch over and the panel system started working, it was great. We didn't really have appraisal issues any longer. Or if we did, there was enough communication to have it make sense. It wasn't unexpected issues with appraisals that were causing deals to fall through.
Those early days of the AMCs, I was in wholesale back then. I was an account executive for a wholesale company. And those early days of the AMCs were like, I didn't know how to handle the problems that arose, right? Like,
it was difficult. Yeah. It was difficult, and not to beat up appraisers, but they were struggling too. They wanted to get paid and move on to the next deal and didn't want to make corrections, and it was just very, very difficult. And
you're in a unique market. It's not unique, but you've been in that market in the Louisiana market.
It's unique.
Yeah, you've been in that market for a long time, and so I would imagine that the appraisal process, while it's important in a lot of markets, in your market, it is very, very concerning or transient to the transaction that you're trying to do, critical to the transaction that you're trying to accomplish.
Yeah, in New Orleans proper, 33 to 35% of the homes are multifamily.
Yeah.
So we've got to make sure that when people do appraisals on multifamily houses, they're experienced at doing that. If they're coming from an outside market where they're used to doing single family houses, that makes it a little bit more difficult. If they're coming from a market where the oldest house was built in the 1980s or 90s, and they're appraising a house built in 1900, it just makes a difference, right? So being able to utilize an AMC or two where we were able to do panels and go in that direction, it just made the transactions smoother, and that's continued through today. I pushed AMCs a couple of times, so I had one that thought they were going to grow in Louisiana, and then they really didn't, and it didn't make sense for them to keep a handful of clients, so they left, and I was able to find another AMC that I really feel comfortable working with. And again, they allow us to have a panel of appraisers, and the appraisers I work with have 20, 25 years of experience in our market. And it's something that is one less thing I have to worry about when I do home loans.
And then it probably paid benefits again come 2020, 2021, when,
Sure.
Appraisers were, some of the markets, I don't know, I didn't cover Louisiana market, but, on the West Coast, appraisals were taking 6 to 8 weeks. And it was kind of like, well, I'll charge a $2,000 rush fee and you can get it in 5 weeks, that type of thing that we were experiencing.
We didn't really run into that as an issue. In fact, we just celebrated the 20th anniversary of Hurricane Katrina. Okay.
Yeah.
In a lot of markets, homeowners during that refinance boom were getting for that. And prior to that, we're getting appraisal waivers. Okay.
Yeah.
From Katrina, we didn't get our first appraisal waiver for 15 years.
Wow.
Because they didn't know. They didn't know whether the house was still in that situation, if it was damaged, et cetera. We've started getting more of them now, but everything was appraised. So it was important that when an appraiser got an order, that if they knew it was coming from particular AMCs, they might know it's from me. They might not. I don't know what the appraiser gets on their end in terms of notification, but
right.
We were able to continue to move in a timely manner without long delays.
Yeah.
So the appraisal issue was definitely an issue back in 2012 when we were moving forward. Time as well, right? Just we were able to have much more control over the lending process. We set up I would call it a team. We set up a team where, we've got, whether it's 5 lenders, 10 lenders, 15 lenders, and that number goes up and down depending on who's doing a good job. And then we're able to get those moved through quickly, right? As you were saying, when it gets really busy, you might not go to lender A because they're at 2-week turn times. You go to lender B who's at 2-day turn times.
Right.
But by being on the non-Del side, I'm able to make sure all my disclosures are done on time. I'm not 50th in line for somebody to send out a CD. I'm 90% through with the closing package before the loan is even out of underwriting, right? Or clear to close. As soon as we're sending that final CD, we're sending the closing package because I'm controlling all of that. So
Ross,
it just let us go much faster.
If I'm not mistaken, you use a third-party fulfillment provider. Am I correct? Right. And so the evolution of the non-Del that I've seen in, my time in this business, right? You had to use a fulfillment provider pretty much before 2020. And then a couple of investors came in and said, oh, no, we'll do the fulfillment for you. And now we kind of see that's kind of like what a lot of the investors are doing. Hey, just take it over. We'll take the fulfillment off of your plate. But I like what you do because the fulfillment providers that you're working with, they still have that intimate relationship where you don't feel like you're 50th in line, I would imagine.
Oh, I'm first in line.
Yeah. Yeah.
Because really it's me. I mean,
Right.
at the end of the day, it really is. So whether you're a smaller company, a smaller mortgage company, or you're a company that's big enough that you have a closer in your office, that closer isn't interacting with a closer from a lender where you say, okay, my closing is going to happen on Friday, but the first time you see a set of docs might be 4 o'clock on Thursday,
Yeah.
right? And this isn't a knock on other processes. It's just
It's
different
just
than
different.
the way I do it. But
Yeah.
whereas if I'm closing on Friday, the Friday before, I've already got the closing package done and
Right.
I'm ready to send it to the title company. And if I get my clear to close on Monday or Tuesday of the next week, great. I just hit a button, and as long, if nothing's changed, I just hit a button and my package is over there 3 or 4 days in advance. And we're balanced on, Tuesday or Wednesday for a closing on Friday. And at that point, I've already ordered my wire from you guys. We've already sent a preliminary number back to the title company. We're balanced financially, a day or two ahead of time, and closings all go really smoothly.
Yeah. We could probably spend an hour talking about what the evolution of first funding has looked like in your time here. And I just kind of want to take me through what you've seen as an observer and a great customer of the warehouse side of it, about what the changes that have come with technology and everything that you've seen advanced on your side.
Yeah, so I think the process has become more efficient.
Right.
The packages that have to get looked at or reviewed have come down in size.
Yeah.
I think once you guys get comfortable with us, the document requirements can be reduced a little bit more. In fact, I just did that with you guys recently.
Yeah. The customation. Yeah, we talked about that. The customation of experience, right? Like we look back at the track record. You've been with us for 12 years. Is that the same level of scrutiny with regards to the doc upload that we need for someone who's been around for 6 months? Absolutely not. The customization can grow with your experience level. Absolutely.
Yeah. And then, in terms of ordering the wires, at one point there were 5 screens you had to go through and fill out. And now I think we're down to 3. And one of them is just validating that the address and the names are accurate.
Yeah.
So that works. I think that works really smoothly at this point as well. On the fulfillment side, you got to stay on top of it. It is more of a responsibility for the lender. Again, whether that's a closer or it's the individual loan officer that you're dealing with, we want the loan off the line. If I can get it done in 2 or 3 days, that's amazing. But that's really not on you guys as much as it is on the back end lender, right?
Yeah.
There are lenders that are really efficient about that, and they'll turn it around, an audit of the post closing package in 24 or 48 hours, and there are some that are 4 or 5 days. And again, it's just something that you think about at the time that you're submitting files. Is it worth it for the interest rate versus the extra 3 or 4 days you might have that loan on your line?
Well, that's a good question, because I always like to talk about this. When you're looking at investors, right? I'm sure your list of investors has probably changed radically in the 12 years that you've been a customer of First Funding. Other than price and turn time, right, which are obviously two very important things for any investor to hang their hat on, what else are you looking for particularly in your market that says, you know what, this is going to be a good non-Dell investor for me?
Yeah. So in this case, really turn time, there's 2 turn times. So as I was just mentioning, right, there's the underwriting turn time, which is, can I get it in and out of underwriting really quickly? And then the second turn time is post-closing turn times. Right. Now, again, going back to what we were talking about before, if the investor's drawing the documents, there's probably a little bit quicker turn time on that aspect, because the documents came out of their system, their documents are going back into their system, but you still might have a post-closing condition that has to get approved. You still have, the original note that's got to get the Bailey letter added to it and then shipped back to them. And whether are they clearing that in the same office? Is that going to another office? And then you're waiting for that communication to happen before you get paid. or they pay the line off. So it's really asking questions about both turn times. I think that's important.
Yeah.
It's important to know, what does your checklist look like? What does your post-closing side look for? COVID made this much more difficult, right? There were lots of new forms. They wanted COVID forms. They wanted, different lenders have different things. It's a lot like underwriting for the post-closing package.
Yeah.
And you can ask questions, but sometimes you don't know until you send that first package through and realize, whoops, I need this and this and this on every file I'm going to do with this lender. If I have two lenders with the same price, I might send it to the lender who doesn't require those 3 extra steps or documents to be done. But it's hard to know that until you do a loan or two. But I would say that's the same thing with regular underwriting.
Yeah, as an account executive, you're always looking for the angles that you talk about. I love that you talk about, because I remember competing against, I was 3 days or 4 days in underwriting and XYZ lender was 2 days. I said, yeah, but once the loan funds, I can purchase it in 3. Knowing your data that you're going into as an account executive for any investor is definitely important. And you got to share that information, right? And one of the things that we do try to stress to everyone is be honest about the feedback that you get from your non-del partners. If you're an AE for an investor that takes 10 days, you got to tell your non-dels that. That's a conversation that needs to happen.
Yeah. It gets because
frustrating. You need to manage your capacity as well.
Yes. A, it gets frustrating. B, can get expensive.
Yeah.
Right. If that line is sitting there, especially if you're in a market, my market, the average loan amount is probably now high 200s, low 300s. But if I'm in a market where my average loan amount is 700,000 or 800,000, right? That loan sitting there for an extra 7 days gets expensive very quickly.
Yeah.
So it is extremely important that conversation happens.
Take me
one
through
more thing, though, really quickly about first funding, which is something you guys have implemented, which I like, are the reports that are available within the website where we can look at them. And even right on the home page, right, you can scroll and see, hey, this is what the average should be. This is what I think you guys showed. This is what the average of all first funding loans are. And this is where your average is. So if you guys are 5 or 6 days and as a mini core, I'm doing a bunch of loans with one company and my average is at 10 days, I know there's something going on there, right? Somebody else, a bunch of other people are using companies that are buying loans much faster than the companies I'm using.
Yeah. And the reports are robust, right? You get all the data input that is scraped from all the loans that you've done. And so it probably makes your call reports easier. It just makes getting the averages and everything that you're trying to figure out how to run your business that much simpler. So yeah, thank you for pointing that out. That is a great feature that we have. So I do appreciate that. I was going to ask you, has being a lender in your market helped you with your market share, you believe, with regards to hey, I'm a direct lender? Is that a big deal for you in your marketplace?
Yeah. So one of the selling points that I use with realtors is that my average closings are about 45 minutes because one other thing that you guys have is you empower us to validate documents.
Right.
So when I order that wire on, Tuesday, Wednesday, Thursday for a Friday closing, okay, I know we're already balanced financially. I know that wire is going to get there at whatever time, 8, 9, 10 o'clock in the morning. That closing happens at 11. I attend the closing most of the time.
Yeah.
I sitting at the table, validate the documents. I immediately show the title company, you missed this date, you missed this signature, you need to fill in all this ID information. Okay, great. This all looks good. All right, here's your funding authorization. And they walk out of the room and walk back in 10 minutes later and cut checks with checks cut. And we all get up and walk out of the room. I mean, it's 45 minutes and the agents are just like, well, wait, didn't we have to send this for funding? I'm like, no, I just did that. And
Yeah.
they love that. So it's definitely something I use in my marketing when talking to agents about, you're not going to be spending 2 or 3 days waiting for funding. You're not going to have to come back tomorrow. You're not going to have to come drive back here and get a check, or, have some other realtor pick it up and then bring it to your home office, which happens. We're able to have the title companies write those checks and be ready to disperse them at the closing table.
That's great. That's fantastic. That is a huge benefit. I mean, you just pointed out two of the benefits that I think don't get talked about enough, which is the AMC, which is extremely, that's one of those things that I'm like, guys, this is a great feature. And then the control and the timing of it. Ross, you and I cross paths at quite a bit of trade shows. I see you, annually at NAM. I want to just share with you, I just got back from Weston Secondary a couple weeks ago. It's local to my market. And I saw some fresh young faces at a conference, and it was fantastic. And one of the things I was talking to a group of kind of first-time attendees about was the idea that if you're fresh to this industry, coming to people like you, Ross, who have been in the non-Dell space for 12 years, 13 years now, like this is really our opportunity. And I know we're going to be together at NAM National this year. And so I'm going to volunteer you on your own behalf before you say yes or have a chance to say no. Like search out the people who have the experience that are in the space that you want to get into to learn the ups and the downs. I'm sure it has not been all puppies and rainbows for you in the 13 years as a non-Dell, and there's probably some battle scars that you've come across, but just seeking out those opinions when you're in that room is a fantastic opportunity. So tell me a little bit about your NAM involvement. I know you're the treasurer now, but you've been involved in NAM for a really long time.
Yeah, man, probably since, so I opened in 1998. I've been involved with NAM for quite a while as a member for a long time. Family always takes priority. So I kind of waited for a while for my kids to get through where I was toting them around all over the place. And then I knew I had the time to commit to NAM. And so that's when I did that. And I was on the board for a few years and elected to be treasurer. So completing that term at the end of September. So very happy about that. And what NAM has been able to do, especially this year. We were directly involved with getting trigger leads approved, which the president is either going to sign this week or will automatically become law. I believe on Wednesday, I think, is the 10-day window that he would sign by. So that should be pretty quick. As well as other things that we're working on at NAM, home affordability, some changes in VA to make VA an even better product than it is. So what I tell people all the time, if I'm teaching CE or I'm teaching new loan officers in the 20-hour class, is this is your career. Join an association. Now, I prefer NAM, but join whatever association you and your company are members of, and with pretty small contributions, you can get a lot out of your association.
Yeah, and I have a lot of admiration for people like yourself, Ross, who give back their hard-earned time and time away from family and time away from their office and time away from the things that actually pay your paychecks, and actually pay your bills. So was there a trigger event that said, you know what, I'm ready to give back? Was there something you're like, I want to have a voice? What was it? And if it's so, what was that event that made you want to take action?
Well, I mean, for me, charity, whether it's really volunteer. I mean, NAM is a volunteer organization, right?
Yeah.
So whether you're volunteering in an association like this, you can see on my shirt for kids that we put on the Zurich Classic of New Orleans here in New Orleans, which is a PGA event. This year, we're giving $3.6 million to children's charities in the New Orleans market. It's just always been a part of the way that I've tried to be as an adult, that I'm trying to make sure my kids understand all that as well, so that they do the same thing. My son is now a junior member of 4Kids as well. So it's just always been a part. And whether it's charity or service for your industry or or just your church or whatever you want to do, I think that helps you be a balanced person. I think business will come back to you through those events as well. And, my opinion, if you're uber focused on just business, you're missing all the other benefits that go along with how great this industry can be, and the money you can earn, and the time and the control you have over your time, and the other things you want to do in the rest of your life.
Well, I can't thank you enough for all the things that you've done for our industry. And again, I just huge appreciation for all of your advocacy. So get you out of here on this, Ross. You and I are going to be at NAMM National. We're going to be on stage, I believe, on Sunday at 10 o'clock in the morning. Probably only our spouses will be in that room at 10 o'clock in the morning. We're going to drum up a lot of people there, but we are going to be talking about the benefits of non-delegated. And I love the fact that you've been a long time supporter of that space. And I think that's an important voice to hear, right? That important voice of like, hey, I've been doing this for over a decade, and here I still am, and it is a great place to be. So looking forward to spending some time with you out in Vegas at NAMM National. So thank you very much for your time today.
Yep. Thanks, Matt. I really appreciate it. NAMM National is a great event. I think it's the largest, in fact, I know it's the largest association meeting in terms of mortgage lending in the country. We have banks, we have mortgage brokers, we have mortgage bankers, correspondents, whatever you want to title yourself in your company, because I hear different names, right? And you do too, probably. Yeah. Wherever you are, there's going to be something new for you to learn at NAMM National. There's going to be new investors there. There's going to be new products there. Again, if you're looking to convert from being a broker to a mortgage banker, please come to the session. I'll be happy to, myself, and I'm sure the other members will be happy to stay around afterwards and give you kind of an idea of what the process looks like. And obviously, First Funding, you have a lot of experience converting people to being mortgage bankers. So it's a good process. It really works well, and gives you a lot of control over how you run your business.
Awesome. Appreciate it. Thanks, Ross.
Very good. Thanks, Matt.
Thanks for tuning into the Non-Del Influencers podcast, powered by First Funding. For more resources and episodes, visit nondelinfluencers.com.